me. Three. I just popped the beat. 4, 5, 6. Here was the money. We are live. Sweet, we are live. We are live. There's some trap. Can anyone hear me well? Please type in the chat. We're going to go over some Forex basics. Close this out for you guys. We're going to do a little free little training session. Free little training session. Let me know if the music volume is good as well. Just type in the chat. Let me know. I see we got one viewer. I want to see if anyone else will hop on. Please type in the chat. Let me know if everything's good. You can hear me well. You can see the screen well. Right. Live chat. Oh, Miss Sweet. We'll give it another minute, and we'll just start off. Make sure you got notes. Make sure you got notes. Write this stuff down. I like that timer. I can start. We got 50 seconds. 50 seconds. Yup. I vape. Yes, I vape. Alright, we're gonna get started here. So, this is a simple strategy. I found it a little bit ago, and it has some great power. Power meaning it's crazy, pretty accurate. Like, obviously, nothing's 100% accurate in Forex trading, okay? If anyone says there's a 100% accurate strategy, they're lying to you, okay? The highest probable trading style around right now is harmonic patterns. and those are about 80–85% accurate, um, using your risk management, obviously, using your risk management. Um, but we're going to jump into it here, and what you want to start out doing is whatever chart you're looking at, whatever pair you're looking at, go to the weekly time frame in your MetaTrader, and look where it's been trading the past few years. Okay, and for UJ here, let me get my shape tool real quick. We've been trading between here, right? That hasn't moved lower, hasn't moved higher. We've just been sort of, trading between this zone right here. So let me delete this real quick. This is my first live, by the way, so excuse me if I pause and whatnot. But to start out of that zone that you draw out of the at least 2 years before, so we're in 18, so at least from 2016 or from before. So in 2016, let's just use that. We've been trading just between here for 2 years. We've been trading in between this zone. So we take that bottom of the zone, right? Okay, we take the bottom of the zone, the even wicks included, take the bottom of the zone, and it actually comes right on to the 0.99.000. And that doesn't happen all the time, okay? But this just happens to come out perfect. So you want a whole number. So say, just in case, let's move this here. Say the wick came down to here, right? And it's 98.7. Okay, that's what the wick came to. You still want to put it at the nearest whole number, which is 99, and you can just edit it, go to parameters, and type in 99, and it'll move your horizontal line, right? So then we're doing 1,000 pip movements, okay? 1,000 pip movements. So 1,000 pips would be 109,000. That's where you put your next line, and so forth. 119, 129, or if you're going down, 89, 79. Okay, and in between these lines here are 250 pip movements, and these are the lines that we mainly trade off of. When it comes to the whole levels, that's usually a pretty strong level. So if you enter, since the trade's not at a whole level right now, but see how it's broken through here into its new quarter point here. Over time, we're going to come back down to where we were. Okay, we're not going to go higher. We can't possibly, but it's broke structure. So I definitely feel like UJ over time is going to come back to 99. Okay, and it happens every single time. If you go to the past, which I will show you guys here in a minute, but we do it in 250 pip movements. So make your whole numbers one color, make your 250 movements in another color. So I chose black in red. So the red lines are 250 movements. So you should have 3 lines between your 2 black lines, and they're all even. Okay, these are very good levels to trade off of. Okay, and I have an EMA as well. I just use a 200 EMA just to get the point of the trend. You don't really even have to do that. You can just zoom out and see where the trend's going. Since 2015, we've been moving in the downtrend, right? So and that's what our EMA says. So we could, it's just for extra confirmation, okay? But anyway, once you have your levels, drawn out, okay, you have your 1,000 pip lines from your nearest whole level, okay, and 1,000 pip movement, 1,000 pip movement, and then the 3 lines, 250 pips, 250 pips, 250 pips, and you do the same thing up here, 250 pips, 250, 250, okay. But once you have that marked out on the weekly chart, okay, let me remove this box real quick. Oh, whoops. I'll put that back to where it was. 119. If you have any questions, feel free to type in the chat as well. But once you have that marked out, now you can hop into the daily, the 4-hour chart, move over, and you'll see how well these lines play off. Okay, they're not exactly spot on. Okay, these lines are basically zones. So think of it like a box drawn out. There's zones. Okay, so don't just take your trade just because it's at the line. You want extra confirmation. Okay. So one way you can do that is EMA cross. It's on a nice structure that was broken. You can use Fibonacci. That's what I usually use, is Fibonacci. Okay, so let me just find an example here real quick. Okay, so right here. I just lost it. Where'd it go? Okay, yes, there it was. Okay, candlestick formations. Okay, rectangle. Okay, so we've seen it. Broke once, broke back through, right? Broke back through again. This time we had a nice break, right? And we had a nice doji candle with this nice momentum candle moving down on the daily. Okay, this is the daily, not the weekly. So we broke structure, correct? We broke this structure completely. So safe to say, once this structure is broken, then you place your trade once that candle is closed. Okay, once it is closed, you don't want to enter early, because even if there's 30 minutes left, that thing can shoot back up. Okay, I've seen it happen. So make sure the candle closes. Once it closed, entry, right down 131 pips within a day and a half. 131 pips within a day and a half. And on a lot size, one lot size, that's about $1,300. $1,300. Okay, so use risk management. Okay, so if you are using a 50-cent lot, it's about $700. Okay, and so forth. You just have to do the math on that. But let me show you an example like back when. Okay, so right here. So let me draw a Fibonacci from a low to a high. Okay, we had a nice pullback to, which is the 382.236 here on a major level. Major quarter point. Okay, and if you've seen this wick form, okay, this is within a day. If you've seen this wick forming, you could have entered anywhere in between here. Personally, near the bottom, okay, because it broke, and then if it came to here, you're definitely looking for a buy signal, which you then can go into the lower time frames, okay, to see the reverse happen. Okay, so let's just say we go into the hour here. Let's go back to where we were. I don't remember exactly where that was at. Anyway, you guys know what I'm talking about. In real time, you go to the lower time frames there. See the reverse happening, take a buy. Okay, take a buy. So say you enter, let's just say you entered when it broke back through our major quarter point in structure here. Okay? So you enter, it closes. You could enter again because if we broke this structure here, you could enter again, double enter, but it keeps rising. Broke structure here, retest, buy again, stack your entries. This thing rose, and you just move your stop loss. You can ride it as long as it's moving in the trend. Okay, as long as it's moving in the trend. But in any either way, you're catching 250 pip moves minimum. If you're a long time trader, if you hold your trades, you can obviously get out earlier if you want, or if you're a swing trader, you know, buy the pullbacks on smaller time frames. But overall, you're trading 250 pip movements. Okay, and it doesn't take too long to complete them. You know, a few days. So you just use risk management and you know, just wait it out. Look for other trade setups. Work on your charting. Okay. People want to be successful in Forex, but they don't spend time learning, perfecting charting, learning different things that can help them master their strategy, etc. You guys know what I'm talking about. You have to put in some work. Okay. People think Forex traders just lay around and do jack shit. They don't do nothing. They are completely wrong on that. Okay? I know a guy that stays up, he works 16 hours a day. Wakes up at 6 a.m., but he goes to bed at 1 a.m. every single day. Because he's trying to get higher than he is now, and he's already full-time. It's dedication. Dedication. Okay? If you lose money, you can't quit. I've lost money. I've lost money. Okay, I've lost over thousands of dollars. It's an educational investment. You are learning. You're gonna make it back as long as you don't quit. Then you outed yourself. You outed yourself. Okay. But let me show you a different example for like GJ here. And I'll do it with you guys. Okay. Ignore my charting here. And I'm on a demo because it's a new broker. I'm waiting for my account to get verified. I switched to Liquid FX because the spread's so much better, and there's no commission. There's no commission. So I thought that was kind of cool and whatnot. So since 2016, you know, we've been trading. Where have we been trading? You see it. We've been trading in between here. Correct? So what do? See how I said it's not always exact? Well, the nearest whole level is 124. Boom. Now, next point is 134. You can click anywhere, it doesn't matter, it'll move it to your exact point. 134. Next point, 144. Next point, 154. Boom. See how these levels play off? Okay. Now, whoops, I accidentally messed that up. Okay, so next is our quarter points, right? So since we're trading in between here at the moment, I'll just mark these up to show you. So 250 pips is 146.5, right? So I'm going to make this red. You can pick whatever colors you want. And this is 146.5. Next is 149.9, which we just bounced off of. As of right now, the candle is not closed. Okay, so we gotta wait for the close. 149. Next is the last one in here is 151.5. So 151.5. Whoops. There we go. Okay, now we go into the smaller time frame. See how these levels play off? See how they play off? Okay, they're zones. They're not exact. Okay, they're zones. So keep that in mind. We have a nice cross on the daily coming to the upside. We're in the uptrend currently. We've been in the uptrend for GJ. It's somewhat of a channel, correct? We have this channel going on, and safe to say is it's going to come up to our next point, which is 151.5 eventually over time. Okay, so let me remove this yellow box, unnecessary. There we go. My eyes are like burning. So, it's safe to say we're going to have a pullback, okay, most likely. Let's go to the 4 hour. We have nice wicks to the downside saying it don't want to push down. The real entry was right here on this wick to the upside. Okay, if you entered at this wick right here, we had straight momentum. We're in the uptrend, and it lines up with a Fibonacci level. Which is good with previous support. There's tons of confirmations there. Enter, you'd already be up about 80 pips within the what is that? Not even a full day. Not even a full day. So for the last size, it's about $800. $800 in a day. Secure release, put your stop loss like in the the resistance here, and if it hits it, you still secured $400, $350, and you have it continue going up. So just secure, use that stop loss. I don't know how many times I've used a stop loss and screwed myself, and we talked about that in training when I first started learning, and I just ignored it. So keep that in mind there. So we're in the channel in GJ, right? We're in the channel. So safe to say this is going to come up to our next level in a week, 2 weeks. At some point it's going to come up. We may see a retest here, which would be nice to see for like a break, retest. We did have a break retest right there, but it'd be nice to come back down again, maybe bounce off our trend line near here, and then come up. But if not, we can catch the next move with the sell. Or if we have a nice pullback with the Fibonacci, we can get in, swing it up, and just implement other things with this strategy. Okay, like over here, you see it's a clear zone, but it always bounced back until it was broken. Right here, sell, clear as day. Okay, so that's why I like seeing it in a bigger picture, and I don't like scalping anymore. You just, with this strategy, you can just take your trade and go on with your day. Go on with your day. Now, there's one more strategy for gold. Okay, and this is different than here. Okay, and I've been learning it. I don't have it down pat, but one of my one of my mentors has taught me this, been teaching the strategy, and he makes $1,000 a day off gold when there's a move. Sometimes, some days there aren't moves, but when there are moves, $1,000, $2,000 a day. So it's pretty nice. So he goes to the 4-hour for gold, okay, and I just have a downtrend line, so ignore that. And he goes to the line chart. Goes to the line chart, and what he does is wait for. Let me go back to the candlestick real quick. Wait for the 2 a.m. GMT time. So in your broker, 2 a.m. candle to think about getting in the trade for gold, because it always consolidates for around this time. See, and then it makes its move. Consolidates, makes its move, consolidates, makes its move. Okay, so wait for that 2 a.m. GMT candle and then watch what it does off the level. How do I identify these levels for gold? Okay, this is only for gold. I repeat, only for gold. He hasn't tested it on any other pairs, so I mean, you can go ahead and try. But he just sticks to what works, and I'm going to do the same thing. So he goes to the 4-hour. Okay, 4-hour first. Keep your chart simple. Okay, and go to the line chart. So with our 2 a.m. GMT candle, which is right here with the vertical line, you want to take the points where it's points, the latest two from before that last day. Okay, so sequentially we're trading zone to zone. Okay, people say, what's TP, what's TP, what's TP? You're trading to this other zone. Okay, so when it hits the other zone, get out of the trade. Okay, wait for the next trade to come. But anyway, as you see, our next points so far are here from the other day, right? And shapes, and then these points right here, these points. Okay, and once you highlight them, put a bar or whatever. I put the horizontal lines because I like them better. But go back to candles after and see how there's wicks. If you're using the little square things, fill the wicks. Fill the wicks. So that's that zone, correct? And you want to do the same thing here. Fill the wicks. So that's zone and zone. So we're getting close to that next candle, right? The 2 a.m. GMT candle. So if it breaks this zone down here, by not just a little bit, not 6 pips, like I'm talking like 10, 15 pips, if it breaks that zone pretty well, then it's coming down to our next zone, which is right here, 1322. So that's if it's a sell. We have to wait to see what happens. Okay, so if it happens to break the zone, we take the sell down about 60 pips. Next to we put our stop loss above the zone and go on with the day. Go on with the day. Okay, don't be staring this shit down because it may not move for a couple of hours. Okay, but if it does not break the zone, if we have resistance like we're having right now, wicks, major wicks, it's most likely going to be a buy. But wait for a confirmation candle. Okay, wait for the confirmation candles so you can successfully take the buy, because gold will fake you out. Gold will fake you out. Okay, as you see, the 2 a.m. GMT candle, it goes up, fakes out, right? People are getting stuck in the buys here. They're like, oh, it's a buy, and then it fakes you out. Right here, it's a buy for a little bit, right? Sell, they're like, okay, it's going to be a sell. Nope, broke through the zone. Okay, wait for a strong candle. See how it's nothing here, and then we have a nice strong candle. That's when you secure the buy. That's when you place your entry. That's when you place your entry. You want a big candle, okay? Or something like this where we have a nice big wick, okay? Like that's a 25 pip wick. All right. So just to go over this again for gold, it's a 2 a.m. GMT candle. So when you're on the hour chart, it's the second, candle from the next day with the period separators. Okay, put a vertical line there. Go to your line chart. Line your two zones on the 4 hour. Okay, not the hour. On the 4 hour, we're taking our trades on the hour chart. Okay, so you take those 2 points from the previous day and wait to see which way it moves. What way is it going to move? Okay, simple as that. And I just want to go over one more thing. I'm trying to give you some free, useful information you guys can use. So, and as you see, just real quick before I switch pairs, if you take this zone and drag it left, it's another zone, right? Okay, zones become previous zones or future zones. Okay, so keep that in mind if you did not know that. Previous support resistance, previous zones can be new zones. Okay, I want to go over, I went over GJ. GJ's kind of wild. I love GJ though. I don't have it loaded up. Just give me a second. Give me 1 second. Where's it at? Where is it at? There it is. AU. AU's a nice pair. Template, naked. Okay. So go to the weekly. Where have we been trading at since the past 2 years? Where have we been trading the past 2 years? Before I mark it up, look at the chart and tell me, do you see where we've been trading? It's been in one zone. I'm going to mark it up. See this here? It's not broken this previous point at all in the past 2 years. Okay? So when it does break this zone, when it does break that zone, it's not going down. It's not going down. If this is broken big, it's going up. It's not going down. Okay? But if it has nice rejection, like up here, we're going to keep trading in between this zone. Okay? So what do we do? If previous people were in here when I was showing the other strategy, what do we do here? The bottom zone, the nearest whole number. The nearest whole number. So what is that? 68, right? 0.068. That's the nearest whole number at the bottom. Okay? And I'll mark it black because that's the whole number, okay? Now we do 1,000 pip movements. 1,000 pip movements for each line. Okay? If you have any questions, type them in the chat if you do. So 6,800. So 1,000 pips is 78, right? 78. So just click anywhere, horizontal, parameters, and just type in 0.78. Boom. It's been broken with wicks. This is safe to say that this is coming down over time. Okay? We're most likely not going to break this. Okay? Not right now anyway. And then the next one is 88.88. And there's our lines. There's our lines. So if you look back in time, see how well these play off of, right? So now after we have our whole levels, what do we do next? We're marking up 250 movements in those, and we trade the 250 pip movements. Okay, so 250 pips from 68 is 7,500, 7,500. So we just type in 7,500, and that's our major quarter point, MQP. So if you use TradingView, I use TradingView, but I'm on my Windows, and I usually use it on my Mac. Then you can label it MQP, major quarter point. Okay. So our next 250 pip move is what? 73. Okay, 73. Boom. And then we have one more, which is 75.5, right? 75.5. So 75.5. And see how that lines up right there. Let me switch this song real quick. Okay? And we're now broken down into this zone, correct? We're now broken down into this part of the trading, okay? But we can still mark up these real quick, just at least 2 of them. So we'll do, it is 85, 80.5, okay? So 0.8, 80, 85, 85, okay? And then we got 83, 83. 250 pips. 250 pips, okay? What happened to my line? 80? Oh, 0.83. That's what happened. 0.83. Alright? And see how these play off? See how these play off? It's mind-blowing, isn't it? It's mind-blowing. So once you have those marked up, let me remove this yellow triangle. Now we can go in the daily or the 4 hour, whatever you like better, and see how we just came to this level here and it's bounced off. We're coming down to our major quarter point. Our major quarter point. Okay? So let's go to the 4 hour. We have wicks all over the place. So right now, you were supposed to enter in this trade. Let me get my rectangle. Right through here. Right through there. Okay? Why do we enter through there? We have previous wicks, and that's a major quarter point. But also what? We need more confirmation. What else? What else? What do you think? Fibonacci. Let's see the Fibonacci level. Right at the 0.5, just about. Right at the 0.5. You trade off the 0.5 in the trend movements. Okay. If you did not know that, and you trade the 0.5 movement off the Fibonacci. Okay. Well, let me delete this. Yo. Okay, we can keep it. We can keep it. Anyway, now that we established it's confirmed, we also have our 200 EMA, telling us it's in the downtrend. We have our 0.5. We have our major quarter point. That's clear. Sell. Sell. As soon as that close, sell. Stop loss above major quarter point and TP down here at our next level. Write it down. Write it down. Move your stop loss. Move your stop loss. Okay. But what do you see happening right now in AU? Does anyone see it? See these wicks to the upside for previous resistance over here? Okay, so if this candle happened to, okay, see how we got wicks upside, wicks downside. It doesn't know what way it wants to go, correct? Now on the daily, if the daily closes under this Fibonacci with a nice like hammerhead, you know, nice move down, closing under these wicks here. If that happens on the daily, by the way, and look left, what do you see? It was previous support. Previous support. So if it breaks through here, not by like 5 pips, 10 pips, but by like 20 pips or more, 20 pips or more, that candle closes, take that sell. And TP is where? Stop loss is where? Above the wicks of this resistance. Okay, so like in these wicks here. Okay, where this zone is, and you just ride it down. If you want to get out early, get out early. If you don't, you don't. Okay, and it may pull back. It may pull back and touch here again. So if you miss the entry, retest. Take your entry or set a pending order. Set a pending order, and just if it goes off in your sleep, it goes off in your sleep. Okay, that's the good thing about trading. You can place pending orders. You can place pending orders, so you know you're like, okay, I know if it breaks this far, it's going down, so I'm setting a pending order right here. And then you just put your stop loss in these wicks right here, and you're good to go. Okay, so let me just show you one more example here. Okay, and I'll hop off here because I've been streaming almost an hour. Okay, but I want to show you how powerful this is, especially with Fibonacci's. Okay, with Fibonacci's. So right here. Right here, Fibonacci, high to low here. Oh, my bad, guys, my bad. Fibonacci, high to low. Correct. We had nice wicks. What is that? What is that? 0.5. So 0.5 Fibonacci. Like I said before, it always usually goes up to 0.5. It's the best trading level. Okay, it won't always come to the 0.5 all the way. It will come to 382. But you want your stop loss in the middle of the 61.8 and the 786. Okay. So that's how we take our entries, guys. We got these major quarter points, and use candlestick patterns, the Fibonacci, zones. Use the wicks. Okay. Look left. Look left. Wicks, 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 wicks. It's clear to say you can place a sell with a small stop loss and ride it back down. Okay, it may break, but look in the past, it's never broken yet. So go with what it's telling you. It's saying sell. That's what it's saying. It's saying sell. Okay, and we have a nice pattern right here. Nice retest, bounce. Like that's saying sell me. Okay. So hope you guys enjoyed the video. Feel free to message me on Facebook. I'll do another live. I'm sort of going in more depth of it. I was probably a little bit confusing, but I hope you guys got some value out of it. It's just major quarter points, whole numbers, 250 pip movements in between. Okay. So hope you guys have a good one.